Hi traders, and welcome to the Market Hotspot. With a lot of traders looking at this 2013-14 Euro USD bull rally, many are getting pretty cautious. That's why we're looking at one style of trading that's embracing the ride. 3 simple steps to trading Dow Theory. So Dow Theory, derived from Mr. Dow himself as part of the Wall Street Journal editorials, is ultimately a technical analysis theory centered on the stock market and the environmental rotation of different industry sectors. The theory is incredibly helpful to traders of all kinds and across multi-asset classes. And ultimately, the many aspects of Dow theory are driven by inflationary factors closely propelled by currencies and interest rates. It's important to recognize that Dow theory was not a specific theory nor a term coined by Dow himself, and in this hotspot, Trade Genius has chosen to focus on 3 of the 6 main elements associated with Dow that will specifically help your analysis and trading of online financial markets. The TG 3 major elements you need to know for trading are: there are only 3 main trends in this market. Each trend has 3 phases, and the trend is your friend until proven otherwise. There are 3 types of market trends you need to know, guys. The major long-term trend spanning over years and dictating the underlying market direction. You then have the medium-term swings, which very often follow Fibonacci pullbacks of 38 or 62% against the trend. And last but not least, the short-term price movements that so many of us trade to capture the intermittent volatility. So be sure to bear these 3 trends in mind each time you open a position. Let's now look at the second element and the 3 phases of each trend: your pre-launch insiders, your lift-off or the move, and the liquidate and distribute phase. Looking at the 3 phases of each trend in turn, this typically begins with the big market players, or the insiders, trying to move markets against current opinion, as you can see. With little impact on price to begin with, these insiders have advantageous entry levels. Next comes the big move. This is the move for you online traders to capture and to profit from. And what is happening here is that other investors and technical analysts are now catching on to the big guys, creating that rumor type viral effect, leading on to this final phase 3, when speculating gets out of hand and the big market players decide to cash in on their earnings and sell off or liquidate their entries to the market. So there you have the 3 phases of the trend, whether you're trading it on the long, medium or short term. Hopefully this should give you a good guide as to the right and not so right times to enter into the market. We now reach the final of the TG3 elements to trading Dow theory. Sticking with the trend will increase your success, or as many of you must have heard, the trend is your friend. In essence, this belief is centered against what traders call market noise. Noise are attempts to disrupt the market trend, such as pullbacks, dips, or fake trends. And Dow theory traders stay strong with the belief that ultimately the trend will prevail and resume, unless of course there is a major trend reversal, which in itself can be tough to confirm, guys. Such examples might include large spike-orientated candles and drastic price triggers, be it major macroeconomic fundamentals, which may pose a large threat to the current status quo. So, the 3 TG elements for trading Dow theory, guys. We've had 3 types of trends, the 3 phases within them, and the trend is your friend. And if you use this theory correctly, you should start to look historically at prices as a whole, and not just piece by piece. This really ought to help you trading the absolute trend, whilst also earning on the pullbacks and the swings simultaneously. Trade safe, and thanks for watching, guys.